just to summarize what I like about Nadex a lot, it's sort of what it comes down to. It's Nadex binary options are based on simple yes or no propositions. The either going to be above or below a strike price. And that sounds kind of easy, but unless you have a really good strategy that has high probability, it can actually be quite risky. It can be like gambling. So when I first started trading Nadex, I said, gosh, this is easy. And, I made a lot of mistakes. The market, I thought I was certain that the mini S&P was going to go up and it would go down and I would lose some money. I go, gosh, why did that happen? I knew it was going to go because it was up yesterday. And after making my typical round of rookie mistakes, I realized I had to get serious about education. Well, fortunately, I work for a company that provides free trading education, so I really got into demo, and I found a couple of strategies, and I really, really worked on them. And I got the results that I was looking for, and it's made all the difference for me. I like Nadex because you always know what your risk and reward is before you place a trade. Everything's an increment of $100 per contract, and it's clearly defined for you. So I don't have to worry about the market running away from me on a margin call like what happened with, people speculating on the Swiss franc last week. Most I can lose is some fraction of $100. And there's no margin. In fact, your risk within $100 is your margin, if you want to call it that. I like the fact that there are multiple markets you can trade. I like the fact you have stocks, indices and commodities and forex currency pairs. I don't trade into the news events, and I haven't toyed around with Bitcoin yet, but I just might if I'm, in demos to see what happens with that. But, everyone has a different trading style, and everyone has different markets that suit their personalities. Some markets are very directional, some of them are very choppy, and, there's a market for everybody, and Nadex does a good job of covering many of the popular markets. I like the fact that as long as the trade is live, you can never get stopped out. I have an example of a strategy that I played today where a lot of people probably got stopped out, but my trades executed in the money. And finally, and I think most importantly, is Nadex is a regulated exchange in the U.S. subject to oversight by the CFTC. That means they have to comply with very stringent regulations, and they're not like a lot of the unscrupulous offshore people where you don't know whether your money is safe, where you're betting against the house. With Nadex, you're dealing with an exchange, which means all they're doing is matching a buyer and a seller. They're not taking a position against you or in any of their instruments. So you're never betting against the house. You're just basically, the person you're competing with is someone who has a contrary opinion to yours. Nadex arranges the match, and that's how exchanges work. So I really like it for that matter. And one person even commented that for as low as $100 to sign up for Nadex, you can actually own a seat on an exchange. By the way, I'm going to try to go to full screen and let me know if this continues to work okay or whether I need to scale it back.
Okay.
Can you see it?
Not yet.
Full screen?
Yeah, now I see it.
Okay, it's good?
Yep.
Okay, so a couple of things I want to go over for folks that may be very new to Nadex. If you go to the Nadex website, there is a lot of really good educational material up there. They've got trading webinars, a schedule of those, how to trade with precision, 5-minute binaries, so on and so forth. They've got white papers. There's a ton of educational materials that you can take a look at. If you don't currently trade Nadex, but you want to try it, you can go under trading and you can open up a demo account, and it's really just as simple as creating a username. If it's available, it'll accept it. first name, last name, phone number, email address, and you've got a 2-week demo with $25,000 in play money. So, you get a chance to see whether this is something that you really like. And my recommendation is to find a couple of strategies, research them, get a demo down, and work on it. And when you're, if you like what you see, if you like the results, then fund a Nadex account. You can do it for as little as $100. That's, in my opinion, that's a very light investment. But you could make one trade, and that will activate your demo account, I believe, for up to about a year or so. So you can continue to work on strategies and refine them until you can fund your account to the appropriate level of trading. Trading Pub's website, I mentioned that we're all about free education all the time. We actually don't have any products or services that we sell. We actually work to promote other people. So under free education, you can go down to Nadex, for example, and you can click on any one of these items, and you'll go into, you'll go straight into an article about Nadex, webinars. There's a lot of good information for not only just Nadex, but stocks, options, futures, forex, you name it. If there are other instruments that you trade from some of the best speakers in the industry. These are people that are regular. Many of them are regular attendees on Bloomberg TV, CNBC, Fox Business News. They're heavyweights, and there's really, really good information. Once a month, I put out a little blog newsletter called the Probability Report. And what that has is a couple of elements to it. I have a listing of all of the Nadex-sponsored webinars that are going to be available for that month. I post an article of the month, and then typically a video or a webinar of the month. So that's a good resource for information. And on the probability report, when you go to that, you'll see this little When Markets Attack book. Can everyone see that okay?
Yep.
That was one of the projects that I did when I got on board in September. I was asked to write a book, and I'd never written a book before. But this book is 255 pages. It has 15 strategies on trading stocks, options, forex, Nadex, and futures. There are 4 Nadex strategies in that book that are really, really good. And the best thing is it's free. So if you go to the probability report and you click on that link, all you have to do is put in your name and email address. You'll download the book, and you will find strategies on trading Nadex spreads. You'll find strategies, something called the power crossover strategy. And then I've got a couple strategies on the British pound US dollar pairing and the German DAX market, which I'll be discussing tonight. Okay, so I mentioned that I've just gotten back into trading 6 months ago, so by definition, I'm a newbie trader. I opened up a Nadex demo account and I funded it with, let's just call it $1,000. I have a daily trading goal, and that is to make $50 in profits. Once I hit that or exceed it, I'm out. And I'm also a big believer in managing risk and reward. If I risk more than $50 to make $50, it needs to be a very high probability strategy. I don't have a problem risking 70 to make 30 or risking 80 to make 20, but I need to have, at least in my mind, a 90% or better probability that I think that that my strategy is going to bear fruit or be successful. I love one-to-one. Risking 50 to make 50 is good, but the plan once again has to be strong. And when I mean strong, I want that to have a 70% or above probability of success. Anything less than that, that's out of the money, if I can get a 1 to 2 risk reward, risking 30 to make 70, love it. Above that, that's great. I, I come across those every once in a while, and those are like little home runs. Um, but I'm still working on how to take advantage of those. Where most of my trading success recently has happened are in the top two bullet points: risking more than 50 or risking 50 to make 50. And finally, the most important point to me is I never want to risk have more than 5% of my account in the market at any given time. As my account grows, I want it to be less than that, more like 2%. A lot of people that I've talked to that have come on board with Nadex that will fund an account with a couple $100 and they'll place a trade risking 80 to make 20, and my stomach turns. I mean, I'm thinking, gosh, if that for some reason that trade doesn't come out, you've blown out a major part of your account. So when you're starting out with Nadex, my recommendation is to stay in demo a lot and work on some strategies that have high probabilities of success and just nail them. And in the background, you can just sort of fund your account, because when you risk 5% of your account or less, it doesn't become an emotional event. You look at your strategy, your probability of success. It's there. You've tested it 10, 20, 40 times. You know what the likelihood is going to happen. And if 5% of your account is risk with something you know it's going to be high probability, you can sleep a whole lot easier, and you can trade without pulling the trigger too quickly and exiting, or just making a lot of bad decisions. How do I optimize risk reward? Personally, I don't like placing market orders. I mean, when you see a proposition and a ticket comes up there and the market order is sitting right there, you're basically buying what somebody else wants to sell you on their terms. What I would rather do is adjust my risk and reward so that I engage a trade on my terms. And that can mean if the market wants me to risk $60 to make $40, I might just modify the ticket and say, nope, I'm going to risk $40 to make $60, take it or leave it. I'll let it sit there as a working order, and maybe the market will fill me and get it. If it fills me and I get it on my terms, and then I feel a whole lot better because I feel more in control of my trade. So basically, here's a side-by-side ticket. I've got the ticket on the left is a market order. I want to buy this particular contract. It's saying if I buy it as a market order, the price is $61.50. But all I have to do is amend that order, that ticket on the right, and say I'm gonna buy that. My terms are $40. So my maximum loss is going to be 40. My maximum profit is going to be 60. And there's 2 hours and 40 minutes left in this trade. A lot can happen in that period of time. The market could come down and fill me, and it happens more than you want it, than you know. So I just like placing limit orders, but that's my personal preference. In the evenings, I kind of take a look at my day and evaluate my trades. I want to see how the market's closed. And then I look at the daily, hourly, I look at the market direction using my three favorite indicators is the 8 EMA, exponential moving average indicator. That's also called the T line. I use the 50 period moving average and slow stochastic set at 1233. In the evening, if I'm going to place a trade overnight, I want a low risk, high reward setup, something that's really out of the money, because crazy things happen overnight. And I don't like going to sleep on any trade where I have a lot of money at risk for a smaller return. So if I place an order at night, it's entirely on my terms. If the order fills, it fills. If it doesn't, I'm okay with that as well. I also check the Nikkei for opportunities. Today was a strong day in the market. I wouldn't be surprised at all if the Nikkei, which closes at 230, doesn't have a bullish day as well. It has a tendency a lot of the time to follow how the major U.S. indices did. So that's just something to keep an eye on. In the morning, I go to go like a fisherman. I go out and check my traps. I wanted to see if any overnight orders filled. I check the Germany 30 market, which is the Dax. I check the pound dollar pairing, and then I check the indices and the commodities I like to take a look at. If there's a setup in play that I really like, I'll engage with a limit order. 20-minute binaries are relatively new. They've been around for a couple of months. I have a love-hate relationship with them. Sometimes I have a great day. Sometimes it's a constant fight. They move really quickly, so you need to have some dexterity and some good rules. Generally, I use the indicators that I mentioned previously, the ADMA, the slow stochastics, the 50-period moving simple average is my primary indicators. I use the daily, hourly, 15-minute, and 5-minute charts to see if there's a binary, if there's an edge on my side. And generally, if the candlesticks are above the T line, I'm in an uptrend. If they're below the T line, I'm in a downtrend. I use stochastics to confirm whether I'm in an overbought or oversold condition. And finally, I plot the 1-minute Ichimoku cloud to confirm whether I'm above or below the cloud, because that has a little bit of a forward-looking indicator to it to see whether I'm likely to be bullish or bearish. But once again, these things move super fast. So, here's an example of a trade I took where going into a 20-minute time period, this candle gap down. This purple line is the 8 exponential moving average. And what I like about it is the market tends to hug it. And whenever it gaps away from the T line, it always comes back. So it gaps, it comes back, it comes over, it comes down, and then it moves. Oops. And then it moves up to this little area. I bought down here once it came. I sold the market right here because it was moving away from the T line. I'm running out of time. It gapped down, stayed below the T line, exited in the money for a profit of $60. This is really a sideways trade, but this is where an indicator can kind of help you. I'm below the 50-day exponential moving average. That's showing me that I'm probably going to be moving into a downtrend. Stochastics around the time that I bought went from close to oversold to straight down. I didn't think it would have time to recover. It didn't. But look at the next bar. Going into the next time frame, I would have lost that thing if this trade were still alive. So they move quickly. You need to have dexterity. And as I mentioned, I have kind of a love-hate relationship right now. I don't have a really strong, super reliable strategy for 20-minute binaries. Okay, so this is the DAX strategy, and I actually love this. This is my favorite strategy. And when it comes down to it, you don't really need a whole lot of strategies. All you need is really a couple to achieve consistency in trading. And I found out about this strategy. I was sitting in on a webinar that was hosted by Tom Busby, who's the founder of Diversified Trading Institute, DTI, in Mobile, Alabama. And he had a webinar that was 30 trading observations based on his 30-plus years of trading the markets. And he was rapid fire with these trading observations, and most of them were common sense. But he came across one, I think it was point number 5, observation number 5, and his comment was that the 7 a.m. Eastern Time hourly candlestick for the German DAX market, or in Nadex it's called the Germany 30, that hourly candlestick at 7 a.m. is a pivotal point that sets the direction of the market for the next hour or so. And then he just went on and went on to the next point. And I went, well, hang on there. If there's any truth to this, that's a binary proposition. So I backtested, and I went back through 30 days of the DAX, and sure enough, that's exactly what was happening. If the 7 a.m. Candlestick was bullish, the 8 a.m. was always closed above the opening price of the 7 a.m. one. Conversely, if the 7 a.m. Hourly candlestick was bearish, the 8 a.m. hourly candlestick would close below the opening price of this, and it was like much beyond 70% of the time, more like 80. And in the last 20 trading days, it's been closer to 90%. So this is something that happens over and over again. For the life of me, I don't know why it happens. I've done a lot of research, but it just does. And I'll show you some history on that. So once I have the a decision on, so anyway, here's my prep for it. This is just super simple. I'm in the central time zone, so I wake up at 5:30, or I make sure I'm at my computer around 5:30 or so Central Time, or between around 6 to 6:30 Eastern Time. I check the economic calendar. I like to use investing.com. That's my personal preference. And here was today's calendar. I want to make sure there are no major economic events in play. And today there was an enormous one. At 8:30, once again, my trading window is 7 to 9 a.m. So at 7:45, there was a European interest rate decision. That's a major event. Then we had on the U.S. side of the pond continuing jobless claims, and initial jobless claims and job stuff. And at the same time, we had the ECB press conference. Mario Draghi was going to speak about quantitative easing in Europe. These are enormous events, and the market gets really, really tentative at this period of time. So it's really sort of dangerous to trade into this time frame. But you want to be aware of the economic calendar. I checked the daily, hourly, 15 and 5-minute charts of the Dax. Is there an uptrend or a downtrend in play? I go back to those indicators that I mentioned, the 8 EMA, the T line, the 50 simple moving average, my slow stochastic oscillator at 1233. And for a 2-hour time frame, I use the 5-minute Ichimoku cloud, once again to see whether I'm above or below the cloud and whether going forward it looks like I'm going to be bullish or bearish. Okay, with the Germany 30 index of the DAX and Nadex, the strike prices that Nadex has are set at 20-point or pip intervals. So that's just a good piece of information to know. What you want to do is you want to choose the 7 to 9 a.m. Nadex time period. And at 7 a.m., as that candlestick develops, you want to choose the closest strike price that's in the money. For example, if that candlestick is developing bullish, and you are convinced that the 7 a.m. hourly candlestick will actually close bullish, then you want to buy the first strike price underneath the opening price or below the opening price. If that same hourly candlestick for the 7 a.m. DAX market, if you're convinced that it's bearish, then you want to sell above the opening price of the first strike price available above the opening price of the 7 a.m. hourly candlestick. Then what I do, the rest of this comes down to your personal risk reward thing. Typically, I'll start by placing a working order or a limit order, risking 50 to make 50, just to see if I can get it. And sometimes that doesn't happen. I have to adjust that ticket and risk 70 to make 30 or 80 to make 20 sometimes. And that's all you have to do. You just wait for the order to get filled, or you adjust your ticket. So here's a historical screen, and I'll show you what I'm talking about. Let's see. I'm going to move right to left. In the first example, you see an arrow pointing to the 7 a.m. candlestick. You can see that it's bearish. And notice how the 8 a.m. candlestick, this is an hourly chart, closed. It was bearish once again. So this influenced that. Next day, previous to that, the 7 a.m. Candlestick is bullish. The following candlestick is bullish. So It's moving as long as you know that the 7 a.m. candlestick is going to be bullish, you can make a decision about the probable direction of that market. The day before that, it's bearish, and it finishes bearish, closes below. And finally, you have 4 successive days bullish, bullish. So you have 4 successive days of that. Now let's take a look at this one. I don't know when this thing was taken. This was a while back, like a month or two back, in our recent past. So let's take a look at today, or the past couple of days. Here's today. Today was a gorgeous day for the strategy. Kind of crazy with the news, but this, where my mouse is the 7 a.m. bar. It took a while to confirm that it was bullish. I mean, it took about 45 minutes, actually. It was going between bearish and bullish because there was some big news and the marketplace was really, really jittery. So it was moving sideways. And then going to the next hour, the U.S. news came in slightly bearish, but not huge. And the Draghi report was very, very bullish. And it moved up there and it was good. But if you'll notice, this wick is going up and down. I was able to place I actually placed a couple trades that I'll talk about a little bit later. But right below the opening price is where I make my trade. I found the strike price at 102.78, so right about here. It got filled. You see how long that wick was? It got filled easily, and it closed in the money. So risking 50 to make 50. I also had a trade way down here off the screen at 107. The market was so jittery up here about what the European news was going to be that I found that something way down here so far in the money that I can't even show it on this chart, and I was able to get an 80-20, risking 80 to make 20 dollars. You can see that where my mouse is hovering down here, I was never ever threatened. The day before, here's the 7 a.m. candlestick. It's bearish, bearish. The day before that, we start off with the 7 a.m. candlestick is bearish. You sell off the top. The next one is down below. That's good. Day before that, big, big, big bullish candle followed by a bullish. If you sell off the bottom, you'd be very deep in the money. You'd be probably risking around 80 to make 20 if you can get that. As for my personal trading style, when I see something like this, I hold my ground. I'll still sell up. I will still sell down here because I hate chasing after the market. Because every time I do that, that's when the market comes back and retraces and knocks me out. So I'll hold my ground down here, and I'll get what the market will give me. Hopefully it's 50 to 50. Maybe it's 60 to 40 or 70 to 30 or 80 to 20. And some days the market just runs away from me so fast I can't catch it, and I'll let it go for another trade. Let's see, the day before that, here's 7 o'clock, bearish, bearish. Do you see how this pattern seems to repeat itself over time over time? I actually looked at the last 20 days. This was a few days ago, and this pattern repeated itself. Repeated itself 18 out of 20 times. So it's pretty reliable. That's 90%. Let's skip that. One of the exceptions to the rule is when you see a market that's in a downtrend. This is the 7 a.m. candle right here. Do you see how it's bullish?
Yeah.
If I followed my rule to the letter, I would have sold. I would have bought the market right here, assuming that the next candlestick would be above it. Sometimes when you're on a really steep downtrend, this blue line is the T line. I mentioned when the market gaps away from it, it always comes back. In this particular case, that candlestick was just trying to get back to the line before it continued its way back down. So that's one of the little exceptions to the rule. If you don't pay attention to where the market is relative to the T line, sometimes it can bite you. Okay, so let's take a look at today's DAX market. Here was today's DAX market. It was crazy. Okay, these two vertical lines right here represent the 7 a.m. open in the market and the 9 a.m. close that I like to use for this strategy. At 7 a.m., it opened at 102.96, and it started moving bearish. Now, this is where you have to exercise patience. There's a lot of economic news coming up here, and you know, there was no real downtrend happening. If anything else, this little fry pan bottom indicated that the market really could be going into an uptrend sometime soon. But a lot of people pull the trigger too early on this strategy, and they see these 20 minutes of bearish candlestick formation, and they're going, that's it, the market's going to go short. Look, you got 2 hours here, be patient. I mean, if you want to be super safe about this, wait until 8 o'clock. Then you will know exactly what the 7 a.m. candle is looking like. So it went down, and it started grinding its way. It finished up here. The hourly candlestick was a bullish candlestick. So I did two things. I bought at the first strike. Here's the opening price right up here. This horizontal line represents where I bought the market, and I got a 50 to 50 proposition. In fact, it filled right here. Okay, so I was good to go. I had this thing in place, and it ground up. I was looking really good, and right here at 7:45, this red candlestick here with a giant wick on it. That's when the ECB interest rates were announced, and the marketplace shot in both directions. They were unchanged. So it shot up this way, it shot up that way, and I got to thinking at that moment in time, if I'd been trading a traditional instrument like futures, pretty good chance I'm getting stopped out. I mean, this was a giant whippy action. I call this a weed whacker. It just takes everything above and below it out of play. But with Nadex, you can't get stopped out. So I live on. And the market moves up, it moves up, it moves up, and then at 8:30, the jobs reports came in slightly bearish, not enough to even move the needle. Drago was a little bit late in this presentation, and as soon as he started talking, he mentioned that Lithuania had joined had adopted the euro, and this candlestick shot up. And then he had some more good news about how they're going to manage, economic stability. And then he started talking about, of course, this doesn't come without risk. I was listening to this whole conference and watching the markets. I was cracking up. Shoots way down. He goes, but now that we have the risk out of the way, here's the upside. And the market shot right back up. And it finished well into the money. So on this particular trade, I had an at-the-money trade risking 50 to make 50. So that was 50. And way down here off the bottom of this thing, I had 3 contracts risking 80 to miss. Excuse me. Risking 80 to make 20, and I picked up 60 down there. When you think about it, the one way down here, that was good all day long. That was not only brought in actually it was $118 that I brought in on these 2 trades. But the one down on the bottom that was so deep into the money that I did a few contracts on, acted as an insurance policy for my 50 to 51. If for some reason this marketplace went down and it never quite made it back, and maybe I lost $50, then I would have netted $10 because I was making $60 well before. But in this case, both of them, this 50 to make 50, I know from back testing works a lot of the time, and I'm going to demonstrate that. The proposition that I had below that was not only gravy, but it was also an insurance. The absolute worst thing that was going to happen to me was I'd wind up making $10 instead of $118. Okay, for people that are new to trading or trading Nadex, this is a little lesson I've learned as a newbie. And this came from one of my mentors. It takes 40 trades in demo to make any theory that you have statistically significant. And, you know, when you're getting started, I recommend that you do that. You find a trade that you really like, do it 40 times. In the case of the DAX, I spent 2 months doing this in demo almost exclusively. Every once in a while, I just saw a gorgeous setup and I took it live. But for the most part, I stuck to demo with this. I executed 40 trades. All of those trades were made in my demo account. They were all taken at the 7 a.m. to 9 a.m. period, and I had strict rules that I adhered to. My risk reward was going to be 1-to-1, risking 50 to make 50. My testing also assumed that I opened up a Nadex account with a $500 opening balance, and I was risking $50 every single time. I did not exit any trade early. I held everyone to expiration. So here's what happened. I did this from September to November. Starting off in September, the first 10-day period, these were all $50 increments, and I wind up out of 10 trades, I lost 2 of them. So I had 8 wins, 2 losses. First 5-day period, picked up netted $50. Second 5-day period, netted $250. Next trading period, next 10 days. I had 9 successful trades, 1 unsuccessful trade. I picked up $250 the first 5 days, $150 the next 5 days. Next 10 days. Okay, in this particular period, I had 2 losses. I had 2 no-fills, 2 days where I just couldn't make the trade happen, and 1, 2, 3, 4, 5, 6 wins. So netting me a total of $200 for that 10-day period. And then finally, I had 3 losses, 6 wins, and 1 no-fill for $150. When you add it all together, I had 40. I managed to go through 40 trades in demo mode, and I adhered to the same rules every single time. 29 of those trades were successful, yielded me a gross profit of $1,450, which was a 72.5% win rate. I had 8 trades where I lost, which cost me $400, or exactly a 20% loss rate. I had 3 no-fills where I just couldn't get the market to fill me for 7.5%, where I wasn't hurt. I just didn't make a trade, yielding a net profit of $1,050, which was $1,550 less. I'm sorry, net profit of $1,050. So if I add that to my $500 opening balance and subtract out $59.40 in exchange fees, that yielded me with $1,490.60 over a $500 opening balance with a 1-to-1 risk to reward ratio. So it's a 200% return, and none of the trades were exited early. So that was between September and early November. I can tell you that lately the markets have been really kind of crazy. If I stuck to these rules exactly right now, I'd have a lot more no-fills. But, you know, it's teaching me a little bit to modify and not chase the market by moving up to the next proposition, but sometimes adjusting my risk reward if I'm confident that the trade's going to be moving in my direction. So once again, with the 7 a.m. back strategy, you want to make sure you be aware that the strike prices are in 20-point intervals. You choose the 7 a.m. to 9 a.m. Nadex time period. At 7, if the bar develops bullish, you buy from below it, buy low, sell high. If you're in the 7 a.m. hourly candlestick is developing bearish, you're going to sell above it. You can place a limit order, risking 50 to make 50, or use whatever risk reward you're comfortable with. Wait for it to get filled, and the great majority of the time you're going to enjoy success. So that is that strategy. A couple of other things real quick. I'm pretty active on a lot of Facebook groups. I actually diagram this thing, and I'll probably get involved with the trading group here and just sort of summarize trades that I've diagrammed. I keep a blog called the Probability Report. Not the probability, I've already talked about the Probability Report. I have another blog. It's called The Inquisitive Trader, and I'm going to use that to outline and diagram some of the strategies that I'm currently working with. Today's trade of the day dealt with today's DAX strategy that I talked about. I summarized the rules of it. I've got the chart and just the annotated chart with everything that happened. And then the economic news, I saw what I was seeing, what trades I took, how it played out. And I also have a link to a video that I did on Trading Pub that outlines this particular strategy. So there's a lot of resources that are available to you, and I just want to thank you guys for inviting me on board. And I want to open up the floor to any questions. I can't see the comments, by the way, so.
Oh, no problem. Here,
Yeah, no problem. Just wanted to quickly thank you, Cam, for being on here with us tonight as well. That was a really great overview of Nadex and also the steps that someone should take to not only document and backtest a strategy so they can see how it works for them, and also to see what they may have to do as time goes on just to make those necessary adjustments, as well as to get an insight on your trading style and the rules for, say, what trading opportunities you should take versus you should maybe avoid them. So Stefan, just like Cam said, if there's any questions, please type them in. We'd love to answer them. And
also,
Stefan,
I'm so comfortable with the subject material. I want to make sure that people kind of understood what I was talking about. Did that come across clearly? Just type in a yes or a no. Although
Yep.
I can't see the responses.
Yeah, getting a lot of yeses. Yes, yes. Does anyone have any questions for Cam?
like we mentioned, guys, we want to make sure that all your questions, comments, concerns are addressed before we close this off and head into our premium live analysis.
All right, I guess.
I think you did pretty well, Cam.
Yeah.
Okay, well.
No questions. Again,
Who knows, maybe
Cam,
I stunned them.
Cam,
Well, listen, I
pleasure
want to
having
thank you all so much for inviting me to this event, and I look forward to doing some future events with Trading Group.
Absolutely.
Most definitely.
Thank you again, Cam.